So Sudip Bandyopadhyay is now joining us to discuss Vedanta. Sudip, in fact, we have also broken some stories here on ET now, indicating that the management is tackling the debt issue at the parent level very intelligently, and it appears that that seemed to have become a priority. First, we saw repricing, restructuring of debt. We saw demerger. Now we are hearing that even some promoter stake sales are happening, some blocks are happening, and the idea is to urgently retire debt and restructure it. Do you see deep value in Vedanta right now?
Absolutely. I think beyond what you mentioned, Ajay. I think the most important thing to my mind is the commodity. Entire commodity segment. I believe that is getting into a good zone. Look, China probably has no other way out than incentivizing production and manufacturing in domestic market. And if that happens, I think global metal prices will see newer highs. Even now, as we speak, the commodities are in a good spot. And remember, Vedanta is a unique company. They have the basket of commodity and commodity production, which is unique. They are the largest aluminium producer in the country with 45% domestic market share. They're the largest zinc producer with 80% domestic market share. They're the largest oil producer in the private sector in India. They are one of the largest exporters of iron ore from India. They are one of the largest custom smelters they have in India for copper. They are poised to be the second largest private player in the power sector. So I think they are very well positioned in this entire commodity cycle, and I would be watching Vedanta keenly. Also remember a couple of things. One is this unlocking of value through this demerger. Now it's 6 clear companies they have with very clear focus, and I think this will be very easy for investors now to look at these individual companies and choose to invest. Of course, it will be easier for the promoters also to disinvest or reduce their holding in these segregated companies once they come into being after the process is over. So this is again a good move. The Tuticorin plant, probably we hear will start soon. That's going to be again a boon for the Vedanta. So overall, we are extremely positive. Financial performance has been good. The cost reduction exercise which they have carried out has started bearing fruit. So on the whole, I think Vedanta is in a very good position, and valuation wise also it hasn't moved up as much as many other peers, or not really comparable, but the metal sector companies have moved up.
Right. So this, specifically I want to talk about how much value do you think long-term investors can look at, purely looking at how the operational numbers were pretty strong, and also if they go ahead and demerge the businesses, where in the next 1 to 2 years do you think value unlocking can take the price?
Well, I think I am definitely looking at a 30 to 40% appreciation within a 1 year time span. Because I think the way the metal or the commodity cycle is positioned now, I definitely see the commodity players benefiting. And in Vedanta, we have a clutch of commodities. I think it's a unique portfolio which Vedanta has, and I think all of these will benefit significantly. Also remember, there is an incremental capex happening on alumina and zinc side. So this is definitely going to help the company going forward. At least the individual companies once they are broken up. But Vedanta, as a Vedanta shareholder, I will get 1 share of all these other 5 companies as well. So I think that's a good opportunity for the shareholder. Also, there is a question of disinvestment. Most probably will come in steel and iron ore assets, which would unlock incremental cash flows and value. So overall, I think they are getting into power distribution, and that again is a good area to get into as things stand today. So I am pretty bullish on the Vedanta story and Vedanta stock at this stage.
Right. Thank you very much for joining us, Sudip. That was Sudip Bandyopadhyay.